Welcome to the dead bat bounce. Markets have bounced even in the face of some of the worst economic reports in history due to the promise of limitless liquidity. But the problem is that mainstream media has driven the world into a panic that will have serious economic consequences due to lockdowns, quarantines, supply chain disruptions, and so on. Meanwhile, a study out of Stanford University stated that the global response has been a massive overreaction that will have serious consequences. Indeed, second and third order effects will carry a huge impact on livelihoods, lost jobs, unemployment, and of course, stress levels. It might be called a quarantine or lockdown, but isn't that just double speak for house arrest? Countries such as Singapore are effectively putting all of their returning citizens, and I think that's close to 50,000 at last count, under house arrest for 2 weeks. They're not allowed to leave their premises, or they face fines or jail time. Meanwhile, suicide centers have reported a surge in suicides. One said that over the last 48 hours, the number of suicides equaled 1/4 of a year's worth under normal conditions. Websites that contain forms for whistleblowers to report sightings of house or public gatherings of groups of 3 or more have been crashing due to so many people attempting to download the forms. When governments intentionally implode economies and then give money to the masses, you have socialized government assistance. And isn't that just a step toward socialism? Civil unrest, supply chain disruptions, shortages, fines, and jail time for those who break the rules of lockdown, and further draconian rules could be on the way. And maybe that's why gun sales have skyrocketed, especially among the Chinese. Meanwhile, the governor of California has halted all gun sales. But it's not just the Chinese who are being harassed. It's often hard to distinguish between Chinese, Korean, and Japanese. But at any rate, despite the easiest money on record, a lack of demand due to lockdowns, panics, and overall uncertainty will spur bankruptcies. And that could cause a rise in unemployment, which could, of course, cause a further drop in consumption, all of which can devolve into a depressionary loop. But based on numerous examples of prior bear markets, going back over the last 100 years, QE infinity will eventually help major averages find their bottoms. It might take longer than expected, such that instead of just one retest of lows, markets may go lower 1930s style. The worst case on record was October 1929 to June 1932. That's about 2 3/4 years from peak to trough. But one big red herring back then was the devaluation of the pound. That was in September 1931. And hopefully the equivalent doesn't happen this time. Now, also, money wasn't as easy then as it is now. It took the Fed a year and a half back then to bring the discount rate down to 1.5%. That was by mid-1931. Today, on the other hand, both the discount and Fed funds rate sit at 0 to 0.25%. With this amount of firepower, it's therefore still possible the major averages will simply retest prior lows and then embark on a new bull. But of course, certain issues remain. The U.S. During World War II sat with record levels of debt, but the U.S. back then was a creditor nation. Today, it's a debtor nation. The ramifications could impact the future sovereignty of the dollar as the world's reserve currency. But nevertheless, this crisis will likely spur major paradigm shifts, as Ray Dalio of Bridgewater has suggested. A number of exponentially growing technologies such as AI, blockchain, virtual reality, they all facilitate tracking and social distancing, may be part of the post-corona chapter. The world will also have to grapple with a number of dominoes that have been tipped due to the economic lockdown. As one example, the Federal Housing Finance Agency director said on Wednesday that it is certainly possible the number of delinquencies caused by the coronavirus outbreak could exceed the subprime mortgage crisis of 2008 in some segments of the market. He cautioned that if this only goes on for 2 or 3 months, and we see pop back in the economy and people are hired back to their old jobs, then I think this will be something the industry can get through without too much stress. But if this is something that goes on for 6 months or more, then I think you're going to see a lot of stress. I wanted to answer an FAQ that was in relation to it went something like there was three FANG stocks: Amazon, Netflix, and Google, and they were at or near all-time highs, and they seem to be resisting the downtrend. But that question was sent a few weeks ago, and that was the case then. But now only Amazon and Netflix are trading around their 50-day moving averages, while Google and the other FANG names have been hit much harder. Naturally, if a stock shows leadership characteristics by resisting a downtrend, it should be placed on your watch list. When a market puts in a major bottom, the top 20% performing stocks and ETFs leave many clues as to future leaders. When the weight of the market comes off and markets move higher, some of these stocks can act like coiled springs, thus are often the price performance leaders in the next uptrend. Meanwhile, the bottom 20% enables one to pinpoint which industry groups and stocks have been greatly oversold that may offer a huge upside. In this current go-around, we've got gold miners, hotels, airlines, logistics companies. These should all be watched for potential entry points because they've been lambasted, but only once the major averages have found their bottoms. And that could be weeks off, as the economic standstill is likely to induce a serious recession, which could easily push major averages 50% or more below their all-time highs. So a lot more selling would not come as any surprise. Due to the speed of information dissemination, the selling may come quick. We may get another wave of panic selling due to the economic shocks that far underestimate the damage done. At that point, maybe that's when the market averages find major bottoms. And as one example of such reports, today's jobs report shows unemployment spiking to 4.4%. That's indicative of the start of past recessions where you have lows in unemployment and then all of a sudden a hurried spike in the following reports. 701,000 jobs were lost, but the reality is several million jobs have been lost so far. The jobs report does not include the start of the lockdown period in the US. So the next one will be quite telling. And another example is Europe. They're facing a deeper recession than in 2008, based on the shocking declines in services activity, which make up most of Europe's economy. As one example, Italy, the services PMI fell to 17.4 from 52.1, which is the lowest number market has ever reported for any of its PMIs, and that's worse even than Greece at the depth of its recession. Pantheon Macroeconomics estimates that Eurozone GDP fell -4% in the first quarter and will plummet 10% in the current quarter. Now, in times of crisis, certain stocks can reap huge rewards. In this period of quarantine, stocks that support online collaboration, which include WFH, that's working from home, are worth a watch. We've got Work, WORK, that has been used by many businesses to collaborate online. Yeah.
Work is a short. There's a short on a double top formation. I think the whole thing with this WFH theme, number one, I think it's really old. People have been talking about it now for weeks. And I think a lot of these stocks have run their course. So you look at Work, you look at Zoom, it's breaking down. I was looking at DocuSign. The big argument here was that people are going to sign their documents, online and all this. It's going to be great for their business. The only problem is you need documents to sign. So, and if there's no business, there's no documents. But you can see here, you get a breakout, and that's a short, and it's a late stage failure. So I would not be telling anybody that this is a theme that you need to pay attention to now. I think it's probably run its course, and if we go to lower lows, then I think a lot of these stocks that are hanging around their highs, and that includes names like Amazon, for example, these could simply pan out as late stage failed bases. And you can see in the weekly chart, that's precisely what you have here as you're trying to get through the highs of the space, and you're failing right near that 2000 level on these stocks. So I don't see that this is a concept that's viable at this point. I think it's probably had its move in some of these stocks.
Yeah,
shortable.
Absolutely. Like last time, I need to make sure everyone understands that when I say put it on your watch list, that doesn't mean put it on your buy list. In fact, I wouldn't be touching stocks with a 10-foot barge pole on the long side because, like I said earlier, we're probably going to retest lows at least, if not undercut them by quite a margin. The amount of damage to the economy is unprecedented. So I think that's got to reflect in stocks and the market averages in general. But what I'm getting at here is that this Corona situation is going to leave a lot of scars, and I think it's going to change the way a lot of business is conducted. I think there is going to be more employees working from home as a consequence, and this is, you know, out to months from now. I mean, not just now, but going forward, I think it's something that's going to stick with us. So in other words, you should look at the industry group and see how it's doing relative to the rest of the market, and if it's showing a lot of strength relative to the downtrends and manages to, it's sort of like Amazon and eBay back in early 2003. They were the first two internet stocks to show price strength against all the other internet stocks. And this was right when the markets were finally healing their wounds and were starting on a new bull market. And I think that was in March, right in March and April of 2003. So those stocks left clues, not just fundamentally, but also on a technical basis. And you always have to have technicals confirm your viewpoints. Otherwise, there's no point in getting involved in any stock. It's just a matter of ego then. So price always guides your entry points, no question asked.
Yeah, and I would say that the price volume action of these names indicates that they're shorts, and work definitely. Zoom is the other one, DocuSign also, and these have been great shorts for me this week. What I'm working today is Citrix, which has been a very volatile one. It's trying to break out, but you notice you sort of have a double top. So it's two tops here, and then here's another top. So you pushed out just to marginal highs, a couple of 3%. And I'm watching this. If the market rolls over, this could roll over like we've seen so many others, you know, do the same thing. So I mean, I'm even looking at names like, you know, Okta. Look at that, has resistance at the 50-day line. And of course, it's the IBD, canned IBD line that, oh, leading stocks holding up. Oh, these are the stocks you want to look at. In a bear market, what's holding up may be just the next to go in the next leg down. So that's something we want to emphasize also. Anyways, go ahead and finish your presentation.
So anyway, this is, you know, the thing also is always know your time frame. So in other words, if we become bullish on the market, say, you know, some weeks from now or whatever, or it looks like the market's putting in a major bottom, that doesn't mean that there can't be some stocks that are still shortable. You know, it doesn't mean it's all or nothing. And you know, what Gil's seeing in work, yeah, I agree with. I think on a short-term basis, it looks like it could be a good short. If the market gets smacked again, look how a lot of these stocks have come straight up from their lows. So in other words, in another down leg, you can bet that some of these companies are going to get hit pretty hard to erase some of these gains that they accumulated so quickly. But at any rate, I mean, it's actually, what was it? Zoom got tagged by the FBI, you know, about security concerns and things like that. And that is a real concern for companies, obviously. So that accounts for their gap down. And I think that the space is vulnerable to security issues because it's relatively new, and so I don't think it's been really tested in real time under fire like it needs to be. So it's going to have some growing pains, you know, like all new technologies. There's another industry that's also that I think is showing some strength, like it's regarding home delivery. And Amazon certainly has been showing a lot of strength relative to the other FANG stocks. I think they're all trading around their 200-day moving averages. Amazon's around its 50-day. There's also a pet product delivery company, CHWY, that pulled back to its 10-day yesterday. And so I think that companies that specialize in home delivery are going to continue to do well. I don't think it's something that's temporary. I think when people start to use these services, because I remember back in the day, people who started to use Amazon started to use it more and more. They just realized how easy it was to receive goods at home. And there's still a lot of people who actually don't really do this, or they haven't made a habit of it. So Corona, the situation we're in, could force people's hands into learning that home delivery of goods is cheaper. You often have a better selection, and it's just a lot more convenient. So anyway, I'm going to finish with an anecdote. Imagine, if you will, that you discovered your deceased grandmother's diary in the attic, where she posted dated events, post-dated events. And one entry that was dated in the future, April 1st, read, "A nice man in China eats a raw bat and starts a global pandemic that specifically kills those around my age. Everyone loses their minds. 40% of the population thinks it's the end of the world. Another 40% thinks it's all fake. And 20% blames the whole thing on cell phone towers. The one thing everyone seems to agree on is that the only way to survive is by hoarding toilet paper. Grocery stores are ransacked, and Charmin Ultra Soft essentially replaces the dollar as the world's reserve currency. Eventually, as hysteria grows, world governments are forced to shut the entire planet down and lock everyone in their houses via GPS tracking, public cams, police helicopters, and draconian law. Meanwhile, the incarceration rate skyrockets as violators standing less than 6 feet from one another are jailed." April Fools. Well, maybe not this year, but hopefully next. Gil, how are you seeing everything?
That was pretty funny. It's true though. It's just absurdly crazy. You know, I don't know. Did you see Chris Cuomo on CNN going nuts? I think it was this morning. I don't know. I saw the video of it this morning, but I was tweeting that. You know, I've had pretty bad flus in my day, and 104-degree fevers, hallucinating, getting the chills to the point where your teeth are chattering. So he broke his tooth, chattering. You know, with his teeth were chattering. I think just because he's stupid, but it's not. It seems pretty hard to me to break your teeth if they're chattering because of a fever. But in any case, or chills, or if you've ever had the shingles, you know, I think, didn't your mom have the shingles?
Yeah, she did.
Yeah, I
That was
had them.
tough.
Oh, then this is about 20 years ago, and oh my God, that I had about 103-degree fever for it lasted about 4 or 5 days, and my whole side felt like literally there were millions of needles being stuck in me, and not just being stuck in me, but like they had little you know, I don't know, uh, jagged tooth, you know, sides to them that they're going in and out. You know what I mean? It was pretty nasty. But I just thought that was really irresponsible to get up on TV and, oh my God, I had chills, and my dead father came to me in an hallucination. It's like I could think of worse things. I actually once, when I had a fever, Christy Brinkley came to me in a hallucination. That was actually pretty nice. So, you know, I guess it depends on what you fixate on. Anyways, somebody says Twilight Zone episode times. Yeah. Anyways, I don't really care much for Amazon on the long side. I think it's been a short up here. So, and it's acting more like a short, like it could be a late stage failed base. I'm not sure with the delivery thing, whether that one's played out either, because Chewy was a short the other day after the post earnings jack. And the other ones, you have Grubhub. That doesn't look so great. So, you know, I'm not so sure. Walmart, you know, my wife's been ordering stuff from Walmart, and then they emailed her back that they can't deliver certain things now. But the thing is, since I'm a doomsday prepper, I have like 5 years worth of toilet paper, which I've been selling to people now for like $1,000 a roll. It's been pretty lucrative. Don't tell anybody. But and then guns, I see there's lines at my local gun shop, which isn't that local. It's in Culver City. And I'm, you know, we had an ammo sale about a month ago at the local shooting range. We just loaded up there, and then 2 years ago loaded up. I think it's silly for people to be buying stuff now, but you know, you're kind of reacting. Anyways, so who wants to short Walmart? Anyways, let's go back to some stocks. Citrix, okay, as I was talking about, you know, it's kind of a weird pattern. I don't know what all this means, but I do know that in January the company borrowed another $1.1 billion in order to buy back their stock, and it looks like that's what maybe they're doing. I don't really see. We use their this GoToWebinar is a Citrix product, but I'm not sure if that's going to become broadly used. They may be benefiting from what's happening to Zoom right now. So I am watching this. I actually have a little tiny position in here. And the main reason is because I got one cross here, but notice how you didn't get any flattening of the 6-period line. Then you get a second cross. Now the 6-period line flattens. You make a marginal high here and you back down. So I'll come after it in here. We'll see if this works. But there are also other stocks that have been working very well as shorts. Some to keep an eye on here that are up. Zoom, Zscaler. I'm not sure why this is rallying. I think there was some analysts who came out and said they would not be harmed by the coronavirus, but so what? They're a stock and they have a ridiculous PE expansion, and I'm not sure whether any of this can hold up. And you have a double top situation here. It looks a little bit like Work did a few days ago, and Work is about 20% off its peak. So that was a great short at the beginning of the week if you were watching it. I thought it could break out if the general market went higher. So for example, if you saw the NASDAQ head for the 200-day line, that could take some of these stocks higher than you think. So you need to have the market sort of correlate, or you have to have the tide of the market, say, working for you when you're trying to play these shorts, because they'll tend to work better when the market goes down. That's pretty obvious in most cases, but not always, because you have something like, go ahead, Dr. K, what you were going to say?
Yeah, I mean, on a fundamental basis, which just means that in the longer term, some of these companies may be able to be the next leaders. Zscaler has this product that is, it basically replaces VPNs. It's more efficient.
Right.
It's a cloud ZP, call it a cloud ZPA service. And so it's superior to VPNs. And of course, more and more people are using VPNs, and companies, of course, utilize the technology. So that seems to be working out very well for them. And they're also doing one other thing, which is the SD-WAN technology. Basically, it allows companies to use public bandwidth for their internet access rather than having to lease private data connections. So those two technologies could be winners for this company in the longer term.
Yeah, I mean, but if you look at the weekly chart, for example, you're basically 4 weeks down and then 2 weeks straight up. So if you bought it on the undercut and rally move down at 40, you've done very well. And I think that's really where you want to enter these. In this position, though, it's a lot like Slack, where you've got a double top, and you could potentially just roll over. So in this case, you know, how many companies?
Yeah, I wouldn't buy it now.
Yeah, no, you would not. But
don't touch anything now.
Down here at 40, you know, right here. So as we buy them,
yeah,
we're not dumb enough to buy breakouts anymore. Although there are these people that continually pitch these things to people on a daily basis, even in a market like this. And I think that's just cheesy and sleazy, if not just plain stupid. But in any case, so what I'll do is with any of these, I'll stock them. Okay, so today, Zscaler, nice entry at 63. Why? Because you have a MACD cross here. And notice at the same time, it's trying to make marginal new highs in here on an intraday basis. And now you're starting to roll to the downside. So, you know, that's not looking so hot here. And that's working right now. So the Citrix is not working. Another one that has been shortable off and on here is CrowdStrike. I mean, there are a lot of companies that play in this space. You have VMware is another one. And I've seen laundry lists of stocks that are going to benefit from this work from home or the move to the cloud. And I think what the coronavirus will do is firmly implant the whole concept of the cloud and its advantages in people's heads. So, you know, there probably will be another wave of cloud growth situations or moves in major leading stocks in the group at some point. But I got to think that we're going to have a big, ugly bear market. Okay, there goes Citrix now, just dropped below 145. But see here how this one, here's what I call an axis line, because you get support here along 60, resistance and resistance here. So this rally close to 60 again. So when I see it do that, I'm going to come after on the short side. Notice again, you had the MACD cross right here, right around 58.50. So I don't care if it's, you know, I don't need to short it right at 60. I'm just watching what's going on here as it approaches 60. And so I'm short this one. It's starting to roll over a lot like ZS. And we'll see where these go. So I've had some pretty huge days when the market has reversed, or if I get lucky. And really, you know, in this environment, when you go short, you're essentially trying to put yourself in a position to get lucky. So, I mean, in the sense that what you're looking for are high velocity breakdowns. And studying the market more recently within the last few years, I've noted this many times before in these webinars and other places, that the sharpest price breaks tend to come off of the highs. That's why these stocks holding up near their highs become very attractive to me as potential short sale targets. So witness something like Work, which is down 20% in 4 days. That's a very nice short selling move. And I want to, you know, get it, hit it, and move along, or as those two bald guys on CNBC that sell books on options tell you. I wonder if a lot of times though with their ideas, have you noticed this? Who are those guys? One of them used to play for the Pittsburgh Steelers. I'm trying to remember. Anybody know them? Anyways, I'm trying to remember the guys. They're two brothers. They wear ponytails and they're bald. So with the little hair they have in the back, they're making a ponytail. And they put out books and all sorts of stuff. Anybody? Nigerian, thank you. Pete, anyways, I've seen them though. They must get hit on a lot of their trades because they got a lot of bad ideas. Anyways, but that's how I approach the short side, and then I'll come after something when it starts to roll. So somebody asked a question: are there any inverse ETFs you like? And meaning what? I'm long the SQQQ. So you had a nice turn on it on the 620 chart here. You had a buy signal this morning about 2060, 2065. Now we're trading 2185, moving higher. I mean, why do I need to have an ETF I like? What you do is I figure tech stocks are vulnerable to breaks, so I'm going to go after the SQQQ using this 620 method, which is something that we talk about constantly. So, I don't have any magical areas of the market that you need to be buying inverse ETFs. I think your entries on the SQQQ this morning, if you were in there, that could set up a move back up here, which means that the market's going to correct to the lows. So, I don't know. Do you have any like magical inverse ETFs that you like, Dr. K, other than the plain index ETFs, 3 times leverage that I think you can play if you think the market is going lower and you find the proper entries on an intraday basis using the 620 chart. That's how I do inverse ETFs. I don't have favorites. I just go with what I think is working. I mean, so
it's a matter of leverage you want to use, and if you believe that the market's going down, then you might and you notice that the small caps certainly have gotten hit a lot harder, which is pretty typical. So the Russell 2000, you could use a 1, 2, or 3x leveraged inverse ETF on the Russell 2000. That's anyone who's done that has done really well.
Yeah, that's been really
one of the weakest.
Yeah, and it's the same drill, I mean, you come in, this morning you could have come into it when you had the MACD cross down here at about, I don't know, what is it, 70, 85 or something like that, if I'm catching this right. I don't know. But 70, 86, yeah. So, that's what we do. And the Russell 2000 has been very weak, but I'm looking for the NASDAQ. I mean, any of the indexes to me are going lower. You also had a very nice inflection point at the 20-day line on Tuesday. And then you broke to the 10-day line. And you notice that there was some buying, a frantic flurry of buying at the end of the day. And towards the end of the week, we talked about this last week, you had a lot of these funds that are 60-40 allocated funds saw their stock allocations drop significantly. So they had to buy stocks to catch up. So I don't understand why they can't just stay in cash, but a lot of them are mandated to be 60-40 stocks because that's some magical formula that they all go by. So most professional money management is really pretty clueless. That's the one thing I learned when we used to advise, right, Dr. K? That's one thing we learned is that a lot of these institutional managers, and we advised around 700, they're not very smart. I liken them to retail investors, dumb retail investors, except that they just have a lot of money anyways. So don't piss them off because they'll run you over with all their money anyways, even if it means they lose money. Any other questions here? So let me see. Here's basically what I do. I think the clouds they've had moves, and I think some of these can come off. So Zscaler's on my short list. Citrix, Okta it's come down a little bit. Ring Central. Now notice this one had a big move here. It broke out. It got IBD excited, and then that becomes a double top short sale entry point. So, and Ring got moving last week because they announced that they were going to create a competing product to Zoom's product, and that this would essentially take up their customer base that uses Zoom currently. So that, in other words, their customer base, they would offer the Ring Central telecommunication or video, televideo, what do you call it anyway? Televideo conferencing, something like that. So somebody said Citrix coming in nice. Yeah, but you jinxed it. Now it's bouncing a little bit, not just a few cents. But anyways, but this became a short. Now you're bouncing out the 50-day line, so it could roll over. But I would want to see it somewhere closer to the breakout point. But you're kind of in no man's land here, so you don't really have any firm points. But you can pick a stock, and this is really how I operate these days. I have a list of maybe 5 to 10 names. They can go, I can, shuffle them in and out, different names, maybe out of a larger list of 20, but I'm basically working the same names day in and day out. So I become very familiar with them. And I only have to watch a few stocks, and I can profit pretty well because they tend to be very volatile. And if you look at a name like Ring and DocuSign, Skyworks Solutions, Slack, all those, they're pretty volatile. And you can actually even sometimes catch moves on the upside if you can get a sense that that's what's going to happen, that you're going to get a pop. That was like DocuSign earlier in the week. And if for those of you who watched, or yeah, you could have watched it, the Benzinga.com pre-market prep radio show, I was on that Monday, and I talked about DocuSign as being viable along the 50-day line here. You had some minor support here, but the volume is essentially drying up, and boom, and they break it out, and then you can flip to the short side, and that's often what I'll do. Buy them along the 50-day line. If I can get a 2-day pop out of them, I'll take it, and then I'll look at flipping to the short side. So, and this has worked pretty well so far. I would say one of the things that I'm handling a little better than I would normally during a short selling, say, expedition that started back in late February is my drawdowns are actually not very big at all. And part of this is because I'm willing to take those temporary 1 to 2 day trades on the long side when I see that something I'm thinking is a short isn't working in my favor. So in other words, being able to sense that there is a bid in this thing, at least for now, because what happens in this market is they run into stocks like they can't buy enough of them fast enough, right? Like people scrambling for toilet paper. And then all of a sudden they can't get rid of them fast enough, and they start coming down hard on big volume. And DocuSign is a great example of that. Ring Central is a great example of that. So you get this volatility that you can play, and you don't need a lot of names to play them. You just pick a good handful of them. You can sometimes, if you want, you can look at the beta, and if they're a higher beta stock, then maybe that you can lean that way. But I just pretty much eyeball everything. So, got invite for an Uber teleconference. Okay, what does that mean? Should we? I think, let's see, what's Uber doing? I haven't looked at it for a while. It was a short way back when, but it was a beautiful short actually when it blew apart. See this one? This was pretty textbook. You broke the 50-day line, you rallied into it once, and that was it. Boom. Now you've rallied above the 200-day line here, and you rolled over. So that became a short sale point once you were able to determine that the thing was going to break. But you also notice that it did break at the same time that the market broke at its own 20-day line, at least on the big three major market indexes. So it means they all go. Yeah, you're right. Everybody's going into the teleconferencing market. There aren't any real big barriers to entry. It's not, rocket science really. The technology isn't all that new. It's fairly simple technology. It's been around forever. So anyways, Dr. K, you forgot to mention, I have to compliment you. You didn't mention Bitcoin once this morning, did you? Or maybe just once, but just once. But that's good. Now Bitcoin had a bottom fishing pocket pivot. What's that?
I'm not saying that's not worth a compliment. Thanks for the reminder. I'll make sure I include it more in the next report.
Well, it had a bottom fishing pocket pivot yesterday, but now it's kind of flailing around. So I watched a video on YouTube last night. I've been watching a lot of YouTube, and I'm realizing there's a lot of interesting stuff on there. But I was watching a debate between Max Kaiser and Peter Schiff. So Peter Schiff was the gold advocate, and Max Kaiser is the Bitcoin advocate, and that was pretty interesting. And the debate was centering over whether, with Bitcoin being so volatile, does it make a very good store of value? And the truth is, from my perspective, no, because unless you buy it low and, then it goes to 13,000 from here or something like that. But it's 5 times more volatile than gold, also 5 times more volatile than stocks. And I would like to see it settle down. I'm really hoping that out of all this crap that's going on today, that the fiat currencies are all exposed for what they are, and that something arises that does fulfill the purpose of a stable currency, a cryptocurrency that also, allows for pretty stable purchasing power parity, rather than something that's mostly, in my view, I treat Bitcoin as a speculative vehicle, and sometimes it's a great speculative vehicle, as we know. So, but I would really like to see cryptocurrencies really fulfill their promise of replacing fiat currencies as stable uh, mediums of exchange that maintain a certain stability in their purchasing power parity. Did I get that right? Yeah. Anyways, you get the idea.
Yeah, and they're on the way. Maker DAO and these other formats are being developed pretty quickly, and they're starting to prove out. But that, of course, that aspect of crypto is that's 2% of all the potential that blockchain is. But I think that potential will, of course, be realized. And I think with this corona and with the recession, it's going to separate the men from the boys in terms of what the dot-com bust did to most dot-com companies. Most of them went out of business, and we're going to start to see, I think, these thousands of ICOs that still are trading, I think, fall to zero. It's inevitable. Most of them are completely deficient. So, it's the thing about Mark Twain saying history doesn't repeat, but it rhymes, and we're certainly rhyming. I think we're going to rhyme very well. These ICOs are going to rhyme very well with the dot-coms of post 2000 market top, and that's good. It'll clean out the system. It's necessary.
Yeah, you're right. That's a good point. And I think, you should watch the video. It's a pretty interesting debate. But I mean, the whole idea, people like to speculate, well, Bitcoin is dead. I think that's a moot argument, because unless it goes to zero, it's not. And it may turn out that the dollar dies long before Bitcoin. And if the dollar goes to zero, then on a dollar denominated basis, Bitcoin goes to infinity. So does gold and everything else. But, that's really what you're talking about is, what will people trust going forward? So, and I think at some point you may see people trust cryptocurrencies a lot more than dollars, just by virtue of what's happening to their wallet. Anyways, somebody says, looks like Citrix not available to borrow on Fidelity. I can borrow all I want on TD Ameritrade. I'll send you some. So, anyways, some other, look at these other names. Netflix is coming in. And see, that's a double top type situation. So around 380, it becomes a short there. And it looks to me like it's just starting to break. Yeah, it's just below the 50-day line now. So that may blow apart. So again at Qualcomm, notice how it can't get above the 20-day line. And so it becomes a short there. You look at some of these other chips, Qorvo, same thing. Okay, look at Micron, same thing. You look at Maxim. Same thing. Let's look at Western Digital. Now, Western Digital actually tried to go long this thing on Monday, and it looked like it was going to get above the 20 line, and then it failed. So at that point, it becomes a short. And actually, that was on Tuesday, and the thing just broke pretty hard. I mean, that's a pretty decent break. It doesn't look like much on this chart because everything has just had these brutal breakdowns. I mean, if you look at this, 72 roughly down to 28. What is that percentage-wise, Dr. K? Like 70%?
Yeah, close to that. Close to, yeah, 2/3
Yeah,
loss.
I mean, that's pretty ugly. So what happens within the context of that kind of decline, a 10% day where it's down 3-4 points doesn't look like much, but it's down from 44 down to 37.83. So that takes you down 6 points. That's a 15% drop. And if you're a leveraged short seller in something like that, then you can make pretty decent money pretty quick. So I like to, like I said, I hit them and then I'll run away and then look at it if and where I want to come back in. So, I'm just wondering if Citrix isn't available on Fidelity. I wonder if anybody else is having a similar borrow problem, because I'm not. And a lot of times that'll tell you that everybody's shorting the thing, or sometimes they think it's going lower, so they're going to short it themselves. That's my conspiracy theory, NVIDIA, look at NVIDIA blowing apart, and this failed at the 50-day line, and it's been running into it over the last 2 days, so you could have shorted it at the 50-day line. So, I mean, there's been a lot of fodder for short sellers here. Just kind of run through some of these names. I'm going to start with the ugliest first. Come on, GoDaddy. See, there's GoDaddy. He's dying. You can see that. Let me make that bigger. And I actually I'd prefer to use a service called GoMommy, but that's just me. GoDaddy, I don't know. Let's see. But you can see all these names have failed at resistance lately. So, I mean, there's a lot of talk about the cloud's going to be big. And yeah, but you could see most of the names in the group are pretty weak and have been for a while. So it'll be interesting to see who rises from the ashes. So I mean, there's been so many cloud names coming out over the last couple 3 years, and now we're going to get this big tide that washes everything away. And I think Dr. K's point that it will be interesting to see which of these come out of here. And our major forces in the cloud to be reckoned with, those could be your best opportunities when we get out of all this crap, but who the hell knows when that's going to happen. All right, here's some wicks, still weak. Look at Shopify is breaking down, but what happened here? It was a short at the 50-day line last week. Boom, that's textbook stuff. And if you look at it, let's look at it on a weekly chart. Oh, let me get this pen out of here. Hold on a second here. This is a late stage failed breakout failure too. And look at how volatile it's been in here. So here's your breakout point. You broke out. You had a decent run. We actually put out a report on it here as a bottom fishing or roundabout type pocket pivot. And it had a great run. So from there, just about, didn't quite double, but almost got there. Now you're breaking down. But notice how you're rallying up into the 50 to 10 week line here. This also coincides with a potential late stage failure. So what's the first sign of a potential late stage failure is a breach of the 20-day line. This is when you start getting it in here. And then you break down entirely, then a rally back to the 50-day line. It breaks from there. So this is almost textbook. So very interesting stuff. So it looks like other people are able to get it short. iBroker, Thinkorswim. I'm assuming that's what TS means. But it doesn't look like it wants to go down. Anyways, Google. These are the big stock NASDAQ names. That was a short at the 20-day line. Tesla was a short today at the 20-day line. They rallied because they showed higher than expected. Not by much. I think it was like 10,000 vehicles total. Higher than expected vehicle deliveries, but I could see that they're pushing through in the last quarter given what's happening. I don't think they're going to show very strong numbers next quarter. So Jim Chanos is still holding his massive short in the company, and he can give you 6 ways to Sunday as to why this thing should be trading at $40 or lower. So maybe he'll be right someday. Now we're starting to come off the lows here. If you look at everything, so I'm watching the skew here. Let's take a quick look. I think I'll close out with this. What you're seeing here, okay, is if your entry's down in here, which on this cross, now of course we've been flipping around here, now we're crossing below, but notice how the 6-period moving average is holding above. So I'll actually sit with this down to 2150, possibly even a little lower, because a lot of times you'll just see it trundle around and then head higher going into the end of the day. So if you want to catch a big move, this is how you play it. And I know, we need to change that FAQ, Dr. K, because it says something about, you buy when the 6-period line, because I don't buy when the 6-period line crosses. I buy when the MACD line crosses. And then I look for confirmation by seeing the 6-period moving average cross above the 20-period moving average.
Yep.
Okay. And then once that happens, I will hold as long as the 6-period line remains above the 20 period line in a bullish configuration, as I call it. So right now you can see the SQQQ, that's the case. So I'm just hanging out. You got to give these things a little room because the indexes move around a bunch during the day. So, and don't be upset if it doesn't work out. Some days it doesn't work out. So what? You're like I say, you're trying to put yourself in a position to get lucky. And you can't do that unless you're going to take a good entry. So you get a good entry here. I'm actually long this thing from closer to 19 the other day, and I've been holding a core position the whole way. And then I'll add, if it comes in like it did this morning, I'll come in and I'll load it up. So I'll double or triple the position, the core position, and then try to play it. And for now, I've taken some off the table. Once the MACD starts to flatten out up here for a period of time, so around in here, I take a third of it off the table. So I'm running with a 2/3 position after a 1/3 position being held overnight. Okay. So that's how I'll play it, and I'll kind of work it a little bit. I'll dance with it a little bit, in other words, It's like my friend Gary Kaltbaum was saying, you guys might know him. He does the Investor's Edge radio show. I've known him for a long time. Dr. K and I have had lunch with him, stuff like that. But he said, you don't want to stand in the way of this market. And I agree, you don't want to stand at all. You want to dance, baby, dance. Anyways, that's my view. Anybody have any last questions before we sign off? So, last call for alcohol, or questions rather. No, I don't see any questions. So anyways, you guys get the idea how to work this market. Again, my suggestion is, and I've been saying this I think for the last few weeks, pick a select group of stocks and just work those, day in and day out, and get to know them. And I look for dynamic parts of the market. So a lot of the names I've been following are these cloud names. So DocuSign, in the chip stocks, Skyworks Solutions, Micron, Western Digital. And among the clouds, Slack, Zoom. Cloudflare is another one that's a very high beta type stock. In other words, look at this thing. You see how you just get these crazy moves. So this actually was a short. On this day, I shorted it, came in a little bit to the 10-day line, covered there. Sort of watching this now because it could bust the 10-day line and turn into a short at that point. So, but also again, remember, if you're going to short, you're likely to have more success if the market goes down. Of course, that wasn't the case yesterday. I mean, there are exceptions, right? Because that wasn't the case yesterday with DocuSign, which was getting tagged badly. It was down $8 yesterday, even as the market was trying to rally. And the Dow, I think, was up. What was it up yesterday? Look how 400 points doesn't look like anything on there. That's crazy. All right. Anyways, you guys, that's all we got for now. We'll catch you next week. Have a great weekend.
So long, everyone.